You are making trading way harder than it actually is. Not a little harder, a lot harder. And the worst part? Nobody told you that. So you kept adding more strategies, more rules, more complexity, and you kept losing anyway. What if the problem was never your strategy? What if everything you were taught about trading was pointing you in the wrong direction from the very beginning? Stay right here, because the next few minutes are going to change how you see this game completely. In this video, I'm going to break down 3 reasons you're overcomplicating trading. No technical stuff, no indicators, no charts. Just 3 honest mental shifts that will simplify your trading, protect your account, and help you finally start moving in the right direction. By the end of this video, something is going to click for you. I genuinely believe that. Let's get into it. Let me tell you about a trader named Ryan. Ryan was serious about trading. Dead serious. Before he ever placed a single live trade, he spent 8 full months studying. He learned candlestick patterns. He studied support and resistance. He went deep into moving averages, RSI, MACD, Fibonacci levels, all of it. He watched hundreds of hours of YouTube videos. He took 3 separate paid courses. He read 4 trading books from cover to cover. He filled 2 notebooks with handwritten notes. By the time Ryan finally started trading live, he had more knowledge than most traders ever build up in their entire trading career. And he blew his account in 6 weeks. How does that happen? How does someone that prepared lose that fast? Here's the truth. And I want you to really sit with this one. More knowledge does not automatically make you a better trader. In fact, too much knowledge, applied without focus, can actively make you worse. Think about what happens when you know 20 different strategies. The moment a trade starts moving against you, your brain doesn't stay calm. It starts scanning everything it knows. That pattern says go long, but this other setup says wait. But that one course said to exit here, but that YouTuber said to hold. You freeze. Right at the moment you need to be decisive, you freeze. This is called analysis paralysis. And it is one of the most common reasons intelligent, well-studied traders still lose money consistently. There's another layer to this as well. When you've spent months learning, your brain starts to believe that enough knowledge should give you certainty. That if you just learn a little more, you'll finally be able to predict what the market is going to do next. But the market will never give you certainty. Not to you, not to anyone, not even the most experienced traders in the world operate with certainty. They operate with probabilities. They accept that some trades will lose, and they manage their risk accordingly. So when the market moves against your trade, which it will, sometimes no matter how much you know, you feel like your knowledge failed you. And your natural reaction is to go learn more, lose again, learn more, lose again. Ryan was trapped in that loop for over a year after blowing that first account. So what actually fixes this? Pick one strategy, just one. Learn it deeply, understand every part of it. Then trade it consistently for at least 3 months. Nothing else on the side. No backup strategy, no just-in-case alternative setup. One strategy. The goal is not to find the perfect strategy. There is no perfect strategy. The goal is to find a good enough strategy and execute it with discipline, over and over again. Here is something I want you to write down if you can. A simple strategy followed consistently will always outperform a complex strategy followed inconsistently. Always. Without exception, Ryan eventually went back to basics. He stripped out everything except one simple setup. He defined 3 rules for entering a trade, and defined 1 rule for exiting. That was his entire system, and within 2 months his results stabilized. Not because the strategy was some secret edge, but because he could finally execute it with a clear, focused mind. Ask yourself right now, how many different strategies are you currently trying to trade at the same time? If the answer is more than one, that might be the entire problem. Not your skill, not your intelligence, not the market. Just too many competing voices in your head when it is time to make a decision. Simplicity is not a shortcut. Simplicity is not laziness. Simplicity is the destination. The best traders in the world have the simplest systems. That is not a coincidence. Now I want to talk about a trader named Kevin. Kevin started with a $2,000 account. He was hungry, he was motivated, he had big goals, and he wanted to reach them fast. So Kevin did what a lot of new traders do when they're feeling that energy. He went big on every trade, sometimes risking 20% of his account on a single setup, sometimes 30%. His logic made sense to him at the time. Small risk, small returns. Big risk, big returns. He wanted fast results, so he needed to take big swings. And here's the thing. It worked at first. In his first month, Kevin turned $2,000 into $3,200, a 60% return in 30 days. He was on top of the world. He posted about it. He told his friends. He felt like he had finally figured the market out. Can you guess what happened in month 2? Kevin lost everything he had gained, plus most of his original capital. He ended that month with $400 left in his account. What happened? The exact same logic that worked on the way up destroyed him on the way down. And here is the math that most traders never fully absorb. If you lose 50% of your account, you do not need a 50% gain to get back to even. You need a 100% gain on what remains. You need to double your remaining money just to break even. Lose 75%? You need a 300% gain to recover. The bigger the loss, the harder the comeback. Not just harder, mathematically, exponentially harder. Kevin's problem was never his strategy. His strategy was actually fine. His problem was position sizing. He was playing Russian roulette with his account every single day. The psychology behind this is something called optimism bias. After a winning streak or a great month, your brain naturally overestimates the probability of continued good outcomes. You feel invincible. You feel like you have figured something out. Like the losses can't touch you anymore. That feeling is real. And it is one of the most dangerous states a trader can be in, because the market does not care about your confidence. The market does not know your name. It does not adjust for your hot streak. And when it turns, which it always does eventually, that overconfident position sizing will take you out fast. Here is the rule that professional traders quietly follow. Never risk more than 1 to 2% of your account on any single trade. I know. It sounds boring. 1% feels like nothing when you're eager to grow your account. But let me show you why it matters. If you have a $2,000 account and you risk 1% per trade, that is $20 per trade. If you hit an absolutely brutal stretch and lose 10 trades in a row, which is an extreme scenario even for a bad strategy, you have lost $200. You still have $1,800. You are still in the game. You can still come back. With Kevin's 30% risk per trade, just 4 losses in a row is enough to leave you with less than a quarter of your original account. 5 or 6 losses and you are done. Which version of trading do you want to build? The one where a bad week is painful but survivable, or the one where a bad week ends everything? Staying alive in this game is the strategy. Everything else comes second. Kevin rebuilt. He started over with strict 1% risk per trade. The growth was slower, much slower. But after 12 months of consistent trading, he had more in his account than he ever had during his big risk days. And he had never once faced a wipeout. He said something that stuck with me. He said, "I used to think risking big meant I was serious. Now I understand it just meant I was impatient." How are you sizing your positions right now? Honestly, because this single change, before you even touch your strategy, can protect your account starting with your very next trade. I want to tell you about Amanda. Amanda was a thoughtful, careful trader. She had studied. She had a real strategy. She understood risk management in theory. But every time she sat down in front of the charts, emotions showed up. She felt nervous before entering a trade. She felt greedy when a trade was going in her favor. She felt genuine panic when a trade moved against her. She felt guilt and shame after a losing day. She had read and heard over and over again that professional traders don't feel emotions, that the best traders are like machines, cold, logical, robotic, zero feelings, pure calculation. So Amanda tried to become that. She tried to suppress every emotion before she traded. She meditated. She practiced deep breathing. She told herself, just be logical. Just be logical before every single session. And it worked for about a week. Then a rough losing streak hit, and every emotion she had been pushing down came back up all at once. She made 5 impulsive trades in 2 hours trying to claw back her losses. She threw her plan out the window. She traded with pure emotion from start to finish. After that day, she wrote in her journal, "I am too emotional to trade. Maybe this is just not for me." Does any part of that story feel familiar? Here's what nobody told Amanda, and what the trading industry gets completely wrong most of the time. Emotions are not the enemy. Unmanaged emotions are the enemy. That distinction matters enormously. Every trader feels emotions. Every single one. Including the traders managing million-dollar accounts. Including the people who have been doing this for 20 years. They all feel nervousness and greed and fear at various points. The difference is not that professionals feel nothing. The real difference is that professionals have built systems that do not require them to make emotional decisions in the heat of the moment. Think about a pilot. A pilot flying a commercial aircraft does not rely on how they feel at 30,000 feet to decide what to do if something goes wrong. They follow a checklist they practice so many times that following it becomes automatic even under extreme stress. A trading plan is your checklist. It tells you exactly when to enter, exactly when to exit, exactly how much to risk, exactly what you do after 2 consecutive losses. All of it decided in advance. When you were calm, when your rational mind was fully engaged, when you are mid-trade and your heart is racing, you do not need to make new decisions. You just follow the plan. The emotional version of you does not need to be in charge, because the calm version of you already made all the decisions. This is called pre-commitment in psychology. You bind your future emotional self to decisions made by your present rational self. It is one of the most powerful tools in trading, and almost nobody talks about it in those terms. Amanda built a simple one-page trading plan. Entry conditions, exit rules, maximum risk per trade, maximum trades per day, a rule for what she does after 2 consecutive losses. All written clearly on one page. She printed it and taped it right next to her monitor. That first week using it, she still felt every emotion. Still felt nervous entering. Still felt the pull of greed on winning trades. Still felt the sting of losses. But now when those feelings rose up, she looked at the plan, and the plan told her what to do. She did not have to fight her emotions. She just followed the rules already written down. Within a month, something changed. The emotions were still present, but they no longer controlled her decisions. There was a layer of structure between what she felt and what she did. That is the real skill in trading, not the elimination of emotion, the elimination of emotional decision-making. And the best part about this? It is completely learnable. It does not require a special personality. It does not require nerves of steel. It does not require you to be wired differently. It just requires a plan, written down, specific, clear, followed. Amanda kept that one printed page for 2 years. She updated it as she grew and learned. But she never once sat down to trade without it in front of her. She told me something simple once that I have never forgotten. She said, "The plan did not make me a smarter trader. It made me a more reliable trader. And in this game, reliable beats smart every single time." Do you have a written trading plan right now? Not something in your head. Actually written down. On paper or a document. Specific rules. Clear boundaries. If the answer is no, that is the single most valuable thing you can do for your trading this week. Not watch more videos. Not take another course. Not study another strategy. Brought the plan. One page, simple and clear. That one page will do more for your account than another 100 hours of studying ever could. Let's bring all three of these together before we close. 3 reasons you are making trading harder than it needs to be. Number 1, too much knowledge, not enough focus. Ryan spent 8 months studying everything he could find and still blew his account. The fix is one strategy, understood deeply, executed consistently. Simplicity does not mean easy. Simplicity means sustainable. Number 2, too much risk, too fast. Kevin had early success and let it convince him to go bigger and bigger, until one bad stretch wiped him out. The fix is 1 to 2% risk per trade. Small risk keeps you alive. And staying alive long enough to learn and improve is the entire game. Number 3, trying to eliminate emotions instead of planning around them. Amanda tried to feel nothing and ended up making her worst decisions from a place of suppressed emotional explosion. The fix is a written trading plan that removes emotional decision-making from the equation. Not emotions themselves, but the decisions they would otherwise control. Ryan, Kevin, and Amanda all made the same core mistake. They believed the market was the obstacle standing between them and success. It was not. Their own approach was the obstacle. And the moment each of them changed their approach, not their strategy, not their market, not some secret edge, everything started to shift. Here is the truth about trading that nobody wants to say out loud because it does not sell courses. Trading is not complicated by nature. We make it complicated. We add layers because complexity feels like seriousness. It feels like effort. It feels like we are doing something real and difficult and worthy of results. But the most consistently profitable traders I have ever seen, and I have been around this space for a long time, have the simplest systems. One setup, one risk rule, one written plan, repeated with calm, deliberate discipline. That is the whole game. And it is simpler than you have been led to believe. If something in this video landed differently than what you usually watch, hit subscribe right now. Every single week I put out content exactly like this. No hype. No 500% returns. No fake lifestyle. Just the honest, real side of trading that most people are too afraid to talk about. And next week we are going somewhere dark. Something that hits traders who are finally starting to win and quietly destroys them before they even realize it. It is called the winning streak trap, and it is more dangerous than any losing streak you've ever had. Scubbard. See you next week.